we've seen in Africa today is the fact that innovation at its edge is outpacing infrastructure at its core. So fintech, financial industry have done a lot. Driving financial inclusion, you can see the result from how payment transactions have grown in year on year. But the concern we have here is that all these are built on fragile, fragmented infrastructure. And this can only result in three things. First, we have high cost of innovation because everyone is rebuilding the rails and the same rails as it stands. The second concern is an offshoot of the first, which is limited interoperability. Now, we see people build things in silos, not putting into consideration different nuances across different markets. And what we then see as a whole at the end of the day is operational inefficiency. Markets like Brazil, UPI that have scaled when it comes to innovation, what they did at first, UPI in India did at first was to actually focus on infrastructure. Once you can focus on infrastructure, then innovation becomes easy. And for us to be able to do this or to scale, we have to look at infrastructure first. And by doing that, innovation then not becomes cosmetic, it then becomes something structural, but it's really infrastructure that can build this. For us to have sustainable innovation, for Africa to then go to that next phase, we have to then start taking infrastructure more seriously and focus on building something that is interoperable across different markets, so that at the end of the day, whatever innovation we have today won't just be localized, but it could be compounded across different markets. And so imagine we then don't have an infrastructure that can then put all this together and we can then transact easily from there. And that's why, that's a challenge. That's one of the infrastructure gaps. We don't have that one infrastructure that caters for different market nuances and stops this fragmentation. I think the second thing we also see is the legacy systems within the banking industry and some of these financial institutions. And really, it's not really the fault of the bank. It's just because in the last couple of decades, innovation has really grown fast. Or technology, let me put it that way, has grown fast. Advent of AI and just different things are coming to play. And some of these systems, core banking systems, are not future-proof. You can see in the last couple of years, a lot of banks in Nigeria have tried to upgrade their systems, right, so that it can be more future-proof. A lot still needs to be done to be able to harness the opportunity that technology is bringing in the payments way. If we don't do this, what then happens is we have slower time to market. Product innovation won't be perfect, and we still then keep patching some of those things. I think the last one I would like to touch on is it's like the identity or passport issue across Africa. So, for example, in Africa, different countries have different KYC needs, have different regulation when it comes to payments or fintech space. I like one of the things that the Central Bank of Nigeria is trying to do with other CBs in Africa to see how they can be uniformity or unification. At least this is the minimum we can do. Once we are able to cross that bridge of unifying what type of identity we need in the African space, then through innovation, through infrastructure now begins from that space, because we then have a level playing to be able to execute payments at its best. Just to close this, the real problem of Africa is not the demand. There are a lot of people in Africa, everyone wants ease. Payments is really the unification and the presence of programmable financial infrastructure that can help us drive transactions across Africa, removing whatever bottlenecks that exist within different markets or the nuances that exist. And we just come together and have that easy flow of transaction, real-time transactions, just any form of transactions, cross-transaction from cards to wallets, from wallets to accounts. And once all these three things are solved, we can then really harness the opportunities that is within the payment system in Africa. So one of the things, hydrogen has been operational for about 2 to 3 years now, fully. And one of the things we've always told the public is we are an infrastructure player. In the last 4 years, we've done a lot of research on infrastructure, and not just Nigeria, and globally. We've done research across different African countries to understand the nuances in payments, to understand how their infrastructure works. We've looked at Nigeria too and see how different sectors, how they want to interact with payments. We've also touched on global. And why are we doing all of these things, we're trying to build a future-proof infrastructure that in the next 5 to 10 years will still be relevant within the market space, even if we do not do any form of optimization or scaling. So hydrogen has built three things in one, right? The first thing, things that are very important to us in building, is to ensure that we build a simple infrastructure that you can integrate with easily. I mean, the end goal of it is just one integration that then can open up the doors for different transaction type. The second part in hydrogen that we've also built is an interoperable infrastructure layer that looks at different markets. It's interoperable with wallets, is interoperable with accounts or cards, and just that one infrastructure that can do that. The third thing, which is very critical, is an infrastructure that takes into cognizance data intelligence. And so what does these three things really mean for the FI business? So when you're partnering with hydrogen, first, you don't have to do a lot of overhauling on your technology, which can be very costly. We put into consideration some of the legacy systems. How can we optimize it, right? Whilst we know that the banks would have to run a race into optimizing it in the future, what can we do with what they have, pending when they get to that future? So that already would reduce your costs, resources, time to market, because our infrastructure caters for that. The second part is all financial institutions in Africa or in Nigeria, we all have the ambition to go regionally or globally. So imagine having an infrastructure that's done that already. So coming into hydrogen, integrating with us, automatically opens the door for regional transactions for you to make that happen. So you have one step at the door already, so that's easy for you. The last thing which I talked about when it comes to data intelligence is the fact that we look at your data, we look at how you interact with customers and see the kind of analytics that you would need or you would have, things you can get out of that to grow your business, how you can unlock more revenue streams. So we always have a robust data dashboard that can tell you things that can help you make informed decisions and can also help you scale your products. So with us in hydrogen, partnering with us, you're going to move from just being a player within the ecosystem to actually being the orchestrator of the ecosystem. Now start with the positive. If the infrastructure system is taken seriously in Africa, one of the things that would be exciting is in Nigeria today, you pick up your phone, you transfer from one bank to the other, and in 1 minute, in less than a second, the transfer is done. Imagine a trader in Nigeria transfers to an M-Pesa wallet in Kenya, and then confirmation is done within 1 second. So when real-time payments becomes seamless and effortless, all this can only be achieved when we get that infrastructure right. The second thing is another key challenge we have in Africa today is settlements. Within different people have different settlement needs. How can we move money across? All these things can be done within that infrastructure layer. I mean, one of the reasons card is still booming today is because they've gotten that settlement infrastructure right. Once in Nigeria or in Africa, we can then have that solid infrastructure right to cater for settlements, for disputes, because the whole essence of payments is to ensure that value is transferred from one person to the other. So when we can see that structure, be it a stable coin kind of infrastructure or just normal infrastructure within a wallet system or moving money, that infrastructure has to be built. Once that is built, then we then start to see seamless transactions within Africa. I don't need to explain that this would boom businesses. People want to buy things that are sold in Africa, Nigeria, and then we then have a boom. It would also help with the GDP of different countries, because then businesses can easily transact. You have more clients to then sell your goods and services to, because you can easily collect your funds in a trusted manner, which is really what the problem is. And infrastructure, the right infrastructure would help too, because the right infrastructure always brings trust into the game, right? Always being transparency into the game. And this is really the comfort the merchants and the customers or businesses or just individuals want generally to scale that. What would it be like if we don't take this conversation of infrastructure into play? We would exactly be where we are today. Fragmented, no growth. Businesses are not booming as they should boom compared to how it is in the Western countries, right? More importantly, I think what scares me the most, right, is then we open up an opportunity for maybe other foreign players to come into Nigeria or into Africa to then have their own infrastructure play within this system and harness the opportunity within that system again, leaving us local players just empty and dry and just having to also run to them for this infrastructure. I mean, there's no way around it. So we have to step up on this infrastructure game so that we can all win within the African space. And it's anyone that actually steps up to this game that would enable this ecosystem and would enjoy the economics of it. And that's why in hydrogen, and that is really what our focus is, to ensure that we have an infrastructure that can scale beyond Africa but globally. And by doing this, Africa would move from being a high-growth payment society to a globally recognized market that is setting the pace for payments. And I mean, that's our mission in hydrogen, and can't wait to have you on board. So what can FIs do to ensure that there's an interoperability play and this bottleneck of just having things together is removed from it? I think the first key thing is to get the right partner that understand the infrastructure play. The truth is that having to build all these things by yourself in silos as a financial institution will be more costly and it would not really make commercial sense, right? But choosing the right partner that has an infrastructure that is already interoperable will then give you that jump start in getting ahead. And so, I mean, once you're integrated with them, it's opening up the channels for different countries. Now, also choose a partner that has the network effect. So you have an infrastructure, but does the partner also have the network? Who are this partner? Who is this infrastructure partner connected to? Because remember that you connect to an infrastructure player, you have to also leverage on the network of that infrastructure player. So that is also key in doing that. And I think the last thing is to also set the goals of what you really want to achieve as a financial institution, right? Sometimes I worry that a lot of us in the financial industry just copies whatever this one is doing this, I also want to do it. The sky is big and there's just a niche market for everyone. So this is where I want to play in. And like I said, who is the right partner to help me do this in terms of infrastructure? And then do they have the right network to be able to then help accomplish this? Once you have this, I believe that you'll be able to scale and remove whatever hurdle that you have within the interoperability concern space. I don't need to say that hydrogen will be that partner for you because already we have the network effect and then we have the infrastructure that is interoperable. Thank you.